Everyone, this is a quick little update. As I'm sure you're well aware, this is Brad Matheny. Sorry, this is the 13th of March. I'm sure you're well aware we're seeing a bit of a breakdown here in the markets. Remember, the news is coming out suggesting that the U.S. government may, again, looking like it will, go into some kind of a shutdown on Friday. That could lead to some very big volatility here. I'm sure that, some of it's being priced in, but understand that would be a big disruption in the market. And I want to warn you that we currently have, based on my proprietary Fibonacci modeling system, a low level down here around 554.12 and an upper level up here around 563.60. It's actually a little too low, but there we go. And those are going to be our, let's call them breakout levels. Okay. So in that case, we would be moving higher. And in this case, we would be moving lower. Now, I do believe, as I've been telling you, we're likely to get a reprieve. So when we get news that the government shutdown has ended or been averted, I still think that we have a very solid upward move pending up into this area. Okay. I still believe we're going to get a pretty solid upward rally up into that area as soon as we get news that the government shutdown has ended. Although I will warn you that if the government shutdown extends, as I mentioned to you before, we could be looking at that March 21st through 24th breakdown low, which is in this area. We could be looking at that being a secondary move down into this 520, 510 area on a fairly large breakdown. So be aware that, going into the rest of the day today, depending on what the news is related to a government shutdown, we may not go anywhere today on the SPY. And I would not be too overly aggressive on holding calls right now into next week. I don't know how long the shutdown is going to take. It will be very disruptive. If you wanted to, you could consider putting on kind of a straddle or a spread where, maybe get rid of this again, maybe having some call options above 564 area, call it 564, 565, kind of in that area, and having some put options that expire maybe out a little bit longer than your calls down here around the 551. I'll mark these for you. 551 and 565. These may be suitable. Okay, you could also try looking at the SSO. We have the same type of scenario. Let me come over here and I'll show you briefly my Fibonacci modeling system. We'll come in here, the SSO. This is proprietary. It's like 4,800 lines of code. And you can see here that we have a buy trigger level here. Let me spread this out. 82.26 and a sell level at 82.14. We're below the sell level. We're currently in bearish trending. The long and short of it, you can see we have these upward targets here. Let's go take a look at daily. And this is eSignal. I do a lot of work in eSignal. So here's our daily trigger. You can see that we have a buy trigger at 82.21 or 88.21 and a sell trigger at 94.16. We're currently in the sell mode. We have not yet gotten above the buy mode. We have upper targets here around 91, 92, and we have lower targets down here around 78, 79. This would be a very clean little trade. Essentially, what you would try to do is you would try to Get yourself some put options, possibly around this. How come I didn't draw a line? Almost horizontal. And call options possibly right above this area. So that would be like 83.50 and a put option over here at 80.74. So come over here, 83.50 and 80.74. Make it 75. And that gives you an idea. Come out of here, edit. Try to make those a little bigger for you. 12 and white. And 12 and white. There you go. So that would be an area that you might play out about 10, 15 days. Because remember, we're either going to get, and this is the way it plays out, we're either going to get, let me get my pen, we're either going to get some kind of a rally up into this area prior to the big breakdown into the March, and this is daily. So again, this is March, so you got to play it out here as March. Let me spread this out and do this a little bit better for you. So here's our March 21st, 18, 19, 20, 21. Okay, perfect. So we're either going to get kind of a rally up into this area, moving down into that April, late March, early April low, or we're going to get that breakdown into, and there's my updater. Try this again. Or we're going to get that breakdown into the lows back over here. So you can see how your calls will expire worthless, your puts may expire or move positive very aggressively, but at the same point in time, you're moving. If you do get this move up here, your puts will expire worthless, your calls will gain quite a bit of value, and that's kind of the idea behind a straddle. What you're doing is you're protecting yourself against one side or the other. So if I had a risk of say $200 on each side, if it was 200 here. Oh, no, go away. I'm in draw mode. Get rid of it. If I had a 200 risk on each side, my goal would be to try to get one side to outperform the other as aggressively as I could. So at this particular case, if I were to think that no bar editor, got to set this as a default. Okay. Then I would want to have it play out where, I can easily make, 100+% on one side versus losing on the other. And I think it's going to work out fairly well. Now you may choose to put like a 2x on the call side or on the short side. Personally, given the fact that we're rolling into this short side towards the end of the month, I'd be looking at that early April zone, April 7th, 8th, 9th, as kind of an expiration. That's about 2 weeks away, 3 weeks away. And I would probably play the put side a little heavier than the call side. Okay, now lastly, before I run out of come back over here. See, it's doing mouse fun for me. We'll come back over here and we'll go to gold and silver. Gold and silver really getting a rally here. And like I said, uncertainty is going to be a huge driver of growth for gold and silver. Remember, I'm talking about, 34, 35 level for silver, on a big expansion, maybe all the way up into the 40s. So we have a long way to go, possibly to get up into 37, 38, 39, 40. And remember, gold, I'm talking about 31 to 3,300. So we have a long way to go to get up into this 3250 area, but I believe it could be very aggressive as traders hedge risk. And if the US government shuts down, I think you're going to see traders hedge risk aggressively. Okay. All right, guys, that's it for now. Bitcoin, let's take a look at Bitcoin down 2000. Yeah, just really consolidating in that channel. Still, like I said, consolidating. I still think we're going to see some movement upside. So we'll see how it plays out. But this is just a quick little morning update to tell you that, the news of a government shutdown. I just read it this morning. The Democrats are trying to play hardball, saying that they don't like what's going on and they want to try to gain some control. So they're willing to vote no. We'll see how the vote plays out. My assumption is that it's going to get a pass because I don't think anybody wants to hear that the government is shutting down while we're going through a contractionary time frame. I think that's foolish. That's like kind of blow off the end of your foot because you have a toenail with a shotgun. Not really smart, but our politicians aren't known for being very smart, are they? All right, guys, that's it. That's your quick little update today. Really, this was all about this move in gold and silver and how I'm just loving this big rally. I want it to continue, honestly. But then again, like I said, I want you to be very aware that, we're struggling here and it's likely because of the shutdown. I wouldn't be too aggressive to the long side until we get some real big news of a ending of the move. So, I mean, if you did want to carry some calls through the weekend, thinking that the government's going to end the shutdown on Sunday or Monday, and you're going to get a big rip to the upside, just be cautious about it. Smaller numbers. Maybe like I said, SSO or maybe something that's not going to be overly aggressive, and go from there. Okay, guys, that's it. I'll talk to you later.